All right, what's up, you guys? Welcome back to the Invested Dog. If you're new here, this is a channel where we talk about understanding money better, how it moves, how people actually build wealth over time, and how to make smarter decisions without getting caught up in the hype. And if you have been here before, you already know what it is. We're focused on building, staying consistent, and thinking long term. Let's get started. There's one metal that's quickly sitting underneath almost every major global trend right now: electric vehicles, AI data center, power grids, infrastructure. That metal is copper. And today I'm going to show you two copper stocks that don't just benefit from the demand, they actually pay you to hold them. Unlike tech trends that come and go, copper demand is tied directly to physical systems: wires, transformers, transportation, energy. Here's the key insight most investors miss. You don't miss, or you don't necessarily need to speculate on copper prices to win. You can own the companies that produce it and collect dividends while you wait. Today, we're breaking down two of the strongest dividend paying copper plays. That's Southern Copper Corporation and that's PHP Group. Okay, so let's start with one of the most direct copper plays in the market. Southern Copper Corporation is exactly what it sounds like. It's a company heavily focused on copper production, primarily in the Peru area and Mexico. Now, why does this matter? This is a pure exposure play. When copper demand rises, Southern Copper benefits directly. So, some of the strengths can be one of the largest copper reserves globally. They are extremely low production costs. They have strong profit margins tied to the community cycle. Let's move on. Let's talk about the dividend profile. So, this is where it gets interesting. Southern Copper has historically paid high dividend yields, often fluctuating with copper prices. So that means when copper prices are strong, dividend prices will increase. And when the copper prices weaken, then dividend prices just adjust to that market, whatever the copper is going for at that time. So you're not getting a fixed income stock, you're getting a commodity linked to cash flow machine. So now, if you're thinking like an investor, the Southern Copper stock is perfect for you. Direct exposure to copper, high income potential, willingness to ride commodity cycles. This is a perfect stock for you to get involved with and for you to invest in. Now, let's move on to the other stock, BHP. That is a tongue twister. BHP Group is completely different. It's completely different of a play from the other stock that we just talked about. This isn't just about a copper company, this is one of the largest mining companies in the world. So, why does this matter? Why did I put this on the list? BHP gives you direct exposure, a diverse exposure at that. It exposes you to copper, it exposes you to iron, it exposes you to nickel, energy transition materials. So, what I like about this most is that BHP has been aggressively positioning itself for future. It's been positioning itself for the future of copper demand, especially tied to energy grid expansion, renewable energy infrastructure, things of that nature. This is an amazing stock to have in your portfolio. So, in my opinion, this is not necessarily a high risk, high yield play. I feel as if this is a scaled institutional grade dividend stock. This is a perfect stock for the investors who want to expose themselves to copper without all going all in, I should say, and to investors who want to have stability and global scale, and investors who want a little bit more predictability for their dividend portfolio and dividend behavior. With that, if you believe that copper demand is going to surge aggressively, Southern Copper gives you leverage. If you believe that in the long term infrastructure growth, but you still want a little bit of stability, then BHP is more of a balanced approach. So here's my real thesis. Here's what I think. I think that the world is not becoming less dependent on physical infrastructure. It's becoming more dependent. So AI doesn't run without power, right? Power doesn't move without copper. You see my line of thinking? The government globally is investing billions into energy grids, updating them, transportation network, energy systems. And that is why I think copper sits in the center of it all. So the question isn't just about will copper matter? Is copper the right investment? I think the real question should be, do you want to own the assets behind it and get paid while waiting? If you want more breakdowns like this, real assets, real cash flow conversations, subscribe and stay consistent.